Back to 2016, the beginning of common market era that facilitated the broadened channels for cross-border investment, smooth entry of foreign capital into the Chinese market. China has attracted a lot of foreign investments in the emerging and high-tech industries. And what will be different for today? In the post-pandemic era, global business is not going away, but the landscape is shifting, with important implications for business strategy and management adjustment. We are seeing a big shift from globalization to regionalization, such as TTIP, Indo-Pacific Economic Framework,
ASEAN,
US, Trade and Investment Framework Arrangement, and RCEP, the world's largest free trade area, involving 15 countries of Asia and Australia, including China, with over half GDP of this zone. The global value chain is transforming from trade and financial capital driven to an era driven by digital technology. New value drivers, more specifically, are digital transformation driven by climate change, decarbonization commitment, green tech innovation, productivity improved by AI, sustainability development of supply chain. China's super large domestic market is an important advantage for development of the dual circulation strategy, on the one hand to improve self-sufficiency, on the other hand, rise share of world trade. The new pattern of dual circulation development has become a major strategic guide for China's overall development during the 14th Five-Year Plan. The latest global economic forecast by the International Monetary Fund shows that China will remain growth potential, especially as a big consumers market, and in 2022, the growth rate forecast shows India ranks the first place, China is the next, followed by Spain, UK, France, and Canada. 2023 ranking shows China with 4.4% growth. The Chinese market has more than 400 million middle-class consumers. Total foreign investment into China shows a rising trend despite supply chain disruption, food and energy shortage, travel control. In 2022 survey on the impact of Russian-Ukraine chaos by EU Chamber in China shows that most foreign companies respond with no change or even more attractive investment destination of China. Taking the EV industry as example, despite the decline in sales, Volkswagen Group is shifting more production out of Europe to China. Tesla's performance was ordinary during pandemic. Both still invested additional capacity in China. Why do they still do this? First, developing new energy vehicles is essential for China's transformation. China offers strong support for EV. Second, China's modern infrastructure network, highly integrated supply chains can optimize the overall costs, making China the go-to place and a business hub. As the accelerated digitalization, making China business environment more transparent, and has upgraded the challenge of regulatory compliance, it is more important than ever for foreign investors to understand China's current strategic focus of development and policy orientation. First, green, digital, innovation, and urbanization are the theme, and green cooperation has become a new direction. The opportunities lie in high-quality and growth-related infrastructure projects cooperation. Second, it's important to be open to explore a variety of new models of cooperations with local partners, share resources such as their channels. China has established over 20 national pilot free trade zones, economic and development zones. Those are selected areas providing incentives for cross-border trade and investment, facilitate high-tech innovation. It's important to understand the comparative advantages of each FTZ and select right places for market entry. Upon the understanding of the relevant regulations, the next step is to discuss on how to set up a company in China. The key factors relevant to enter a new market include: understand the industrial segmentations, the life cycle of your company and investment stages, and identify the applicable cross-border business cooperation model to avoid policy red lines. Understand the business environment, how to access to credit capital markets, degree of investor protection in this market, international and local taxes for equity structuring, transfer pricing, and optimize your costs. One of the most important factor is to identify key stakeholders and leverage their power to achieve win-win. Taking EV industry as example again, understand the industry chain locations in different regions of China, identify industrial associations at national and regional levels that can help you connect local resources among all stakeholders, government authorities highly related to foreign investment in EV industry. Other stakeholders include corporate and professional partners, banks, community, suppliers, customers, investors, lawyer, auditors, PR,